The problem is most people don't start. And generally what they say is, I don't have the money and things like this. And it's ridiculous. We didn't have money either. And so what we'll be talking today is about how we start here and go over here. Because where Kenny's at right now, at this end of the process, is that you don't need much of your own money anymore, do you? So Kenny and I have been friends for about 12, 15 years now. We've made millions of dollars together. We've never lost any money, ups and downs. Even when it was going down, we're making money. And that is the power of Rich Dad's education, Rich Dad's coaching, our books, our games, and all that, is to get your mind into the game, because that's all it really is, right?
Well, people ask, sometimes they question, well, what do you mean you've never lost any money? Well, the reason is that because everything that we've done has been based on cash flow. So every property that we've purchased together has always been based on cash flow. So
we're going to explain that most people flip properties. We don't flip.
Right. So like if you buy a piece of land, there's no cash flow. If you buy a vacant building, there's no cash flow. But everything we buy is based on cash flow. So we're not as focused as the value of the project, because we're not trying to sell it at a higher price later. Although we are focused on that. We want to make sure that the property goes up in value. But if it doesn't, if it stays flat or even goes down, at least we have that cash flow to fall back on.
Right. So the point here, ladies and gentlemen, if you're just starting out and you're right here, you may not have much money, may not have a job and all this, but that's really not an excuse, because you can still start. The reason I got into real estate was that my rich dad, this is back in the 70s, he knew that President Nixon had taken the dollar off of the gold standard and the prices were starting to rise. And so Rich Dad said one thing, he says, don't save money, learn how to use debt. And so it's counterintuitive to what most people think, because most financial advisors say save money and get out of debt. And we're saying don't save money, get into debt. So it's a different process, so that's really it. And Rich Dad says, you got to get some education. I said, well, how do you get that? I asked if he would teach me. He says, no, waste my time. So I signed up for a little real estate course. I've told this story before. I get tired of listening to myself. It was $385. It was 3 days. That was the start. So I signed up. 3 days later, at the end of the course, he was a great instructor because he was a real estate investor. He didn't need the money. And that's when you know the guy is real, because you could tell he didn't need the money. He liked teaching. He liked inspiring people. So it was just like my rich dad. He says, you don't need the money. So then the next thing he said at the end of the program, he says, when you leave this program, it's 3 days, Friday, Saturday, Sunday, he says, your education begins now. When you end Monday morning, your job is to look at 100 properties. 100 properties in 90 days. Take everything I've taught you and look at 100 properties. That was the start. It went to real estate agents, went through the little files. It was really antiquated ways of MLS, multiple listing services. We were looking for little dinky deals, small deals, because that's all we could afford. We didn't have any money. So we kept looking, I go knocking on doors at real estate agents, and realtors, they're not the best investors, are they?
No. They're all focused on commissions, normally.
And I go knocking on the doors, and the first thing they say to me, you can't do that here. This is Hawaii. You can do that in mainland, in California, Nebraska, but you can't do it here in Hawaii. And that's the first thing one of the first things my advisor said is that's what losers will tell you. You can't do that here. Look, somebody is doing it here. May not be the real estate agent, but it might be you. So I knocked on the doors, we'd find these deals, we had to go look at them, and we had to write down. It was a 3-bedroom, 2-bath, 65. Back then it was $65,000, was a lot of money in Hawaii. Now they're $4 million. But we would write these things down and make an offer and do this. And so at the end of 90 days, we had 100 of these. And it was day and night. We just kept going until we got it done. And that was the process.
That's right.
At the end of the process, I'd gone through 100 deals. And it was like, wow. I learned more going through the process, talking to real estate agents, knocking on doors, looking at different properties. And finally, I was desperate. This guy says, well, I got what you're looking for on the island of Maui. How can Maui be affordable? But that's your block. So I flew over to Maui. I found this little 1-bedroom, 1-bath condo right in Ka'anapali, the richest place on earth. Little 1-bedroom, 1-bath condo for $18,000. I went, holy mackerel. But the deal was I could not use any of my money. That was, the advisor said, I'm going to teach you so you'll never need to use your money again. If you can raise capital You'll always be a rich man. So I go to this little $18,000 unit, little dinky thing. $18,000. I said, what's the price on it? He says, I mean, how much do I put down? He says, $2,000 or $1,800, 10% down. It was a foreclosure. I broke up my credit card and I bought it. So I had no money in the deal and I made $25 a month. And my brain went, it shook. I went, oh my God, I'll never need money again. I can never say I can't afford it. And I can never say I can't do that. But I would not have been able to do that if I hadn't started with a little one bedroom, one bath. So I understood, because all we have to do is put our money in, but we would not have put our money in if we didn't understand what you were doing. If you're in stocks, you're in equity. You see, the beauty of real estate over stocks, there's margins and things like that with stocks, but with real estate, banks are really anxious to lend you money if you're good. If you're not good, they don't lend you money. So again, it goes back to when somebody says, I don't have money, it's because you don't have you don't have education. You know, stuff like this and this and this. You go, well, I don't have money, so I don't start. Well, you're not supposed to use your own money anyway. And that was my rich dad's lesson to me back in the 70s. He says, look, the dollar is no longer backed by gold. The dollar is now backed by debt, U.S. Treasuries. And he says, if you're going to be rich, you'd better understand how to use debt. Meanwhile, the other people, all the financial people, oh, save, and put your money in the mutual funds. Would you do that? In other words, if this is a bank or a mutual fund company or whatever it is, the moment you put your savings in here or you put your 401k to the bank, it's a liability because they're now responsible for it.
Right.
And they've got to move that money over here. The only way they can move that is by debt.
Correct.
So Kenny goes up there to the insurance company, a mutual fund company, and he says, can I have some money? I got this business, I got this huge project over here, I need to move it. And today, the big problem is you guys have too much money, right? So this is the strange part. This is the bank, your savings are their liability, but if this is you, your savings are your asset.
Right.
That's why it's called a balance sheet. So the reason my rich dad says I had to learn how to, invest in real estate and get comfortable with it, start the process, was because I needed to borrow this money out, whereas the other financial advisors say, keep your money over here. To me, this is really stupid.